the Fed do what it does, let's find out whether the RBI's pause has had an impact on the real estate space or not. Puravankara, they recently, about an hour ago, reported their fourth quarter business update, where the company's actually achieved its highest ever annual and quarterly sales in any financial year since inception. So it's been a record-breaking quarter and a year for the company itself. Abhishek Kapoor, who's the CEO of the company, joins in now. Abhishek, you said that, back in the day when the RBI was consistently increasing rates, there wasn't much of an impact on demand. But do you think there could be a positive spillover now that there has been a bit of a pause? All those guys who were holding back perhaps will now go ahead and buy. And in your portfolio, what are the products which are doing well? Is it your affordable housing Provident or the luxury one Puravankara? What are your expectations?
Thanks, Mangalam, for having me on the show. So from the point of view of the market, what we see on the ground is really, as I said earlier also in the past, there is no impact of the rate hikes. In fact, this pause is only a positive, for the sentiment for the home buyers, because now people can comfortably take the decision, and there is an expectation, in fact, that this will continue to hold, which we are also hopeful, and I think it's a very, very positive development. And as a business, if you look at the business that we are doing today, or the numbers that we have performed on last year, as you rightly said, highest ever for volume, 4 million square foot, value 3,100 crores, and collections, most importantly, which is 57% higher at 2,250 odd crores. All of this has come together because the brand and the market both are supporting. Of course, the brand is really, we have made a lot of structural changes, but coming back to the point, the demand has been cutting across all businesses, which means Puravankara, Provident, and Purvaland, all three businesses have done very, very well. And what we are seeing is that really the demand is not getting impacted in any of the segments. In fact, it's more a factor of launches that decides which business is able to do better than the other. So that's the only, limitation, supply side, not really the demand side.
But we had a very detailed conversation with a lot of real estate experts a couple of days ago, and they made this point that all markets are doing well, but Bangalore as a market is slowing down a bit because of the, the layoffs that are happening there, the slow growth in the IT sector, perhaps people preferring to rent rather than buy homes in Bangalore. You have a large presence there. So are you seeing some slowdown in that part of the market? And if yes, what do you think the impact could be? Could it be in, in the next few quarters? If yes, what could the growth slowdown look like?
Look, I have absolutely a contrary view. We have got the largest presence in Bangalore. Today on the ground, if you look at our business, we have performed very, very well in both sustenance and new launches. I think what's working for Bangalore are two things, why people are buying. One is the rentals have gone up significantly, and that's happened because people have come back to work. And the other trend that we are clearly seeing is that companies have taken an in-principle decision that everybody has to come to work in a hybrid model, at least 3 days a week. In fact, we are aware that there are a whole lot of companies who have made announcements and given a time of 3 to 4 months or 5 months somewhere where people have to plan, and they're still not within the city because they had all gone to hometowns or other locations, and they were operating from home because it was a work from home environment. But that's changed. So a lot more people are coming into Bangalore. And we expect this trend to continue, in fact, in next 4 to 6 months. If you look at last year's commercial demand, again, the numbers haven't really dropped. So, we don't see any real reason for seeing any slowdown. And that is, in fact, the fact of the numbers says it all, because we have really, really outperformed on our own numbers year-on-year basis. And our largest inventory is being sold in Bangalore. So we don't see any impact, and we don't forecast any impact as far as the Bangalore market is concerned. In fact, if you see, the realization has gone up, 14%, right? Same quarter last year versus this quarter. So there is a shortage of supply in Bangalore. If you look at the inventory overhang, you are looking at less than 12 months. Where is that coming from? The fact that it is less than 12 months, it's one of the lowest in the country.
But, Abhishek, in that context, though you are so bullish about, the Bengaluru market, not seeing any kind of slowdown, and FY23 has been a great year for you all, what do you think would probably be the biggest headwind going into FY24, according to the company, something which you would be looking out for very closely? And are you internally estimating that you can better this 29% growth in FY24? Are you confident of that?
So let me answer it in two parts. I think risk mitigation, risk assessment is part of our job, and we continue to do that on a very, very regular basis. One of the biggest risks and the concerns that we had was the fact that the interest rates have kept rising. So there is a mitigation plan that we have in place as far as the business is concerned, should the interest rate continue to go up. The second part is, as a business, we are looking at launching 14 million square foot in next financial year, which is starting April to the next March, right? We already launched 6 million square foot last year. Now that 6 million plus the 14 million, that 6 million goes into sustenance this year. So it will continue to add value to us. And the new launches will add further value in terms of sales and volumes and market share. So we are quite confident that we'll continue to grow. But having said that, as a risk mitigation, we do have a plan. One of the biggest concern was slowdown in the global environment and the global headwinds, but we believe that India will outperform the global markets. So far, we don't see any impact. And should there be any impact of interest rates or slowdown, then we do have a mitigation plan which is pretty much in place, and we believe that we'll be able to mitigate those risks as we go forward.
So let's put numbers and timelines to your aspirations. I mean, the last time we spoke, the value of your unsold inventory was close to around 5,600 crores. So point number one is, by when does all of that, get liquidated, or rather you make money on that? Secondly, what are your volume and value targets for FY24?
Look, we don't give forward-looking statements, but what I can share with you is that the total value that will get top line potentially, which will be on the floor by the end of next financial year, including the 6 million and the 14 million, which is about 20 million square foot, which will be on the floor, will be almost 15,000 crores over and above the 5,600 crores that you spoke about. So we will be in the market with almost 25,000 crores of inventory. So we believe that it's a matter for us to focus. We have made a lot of structural, fundamental changes in the company in last 3.5, 4 years, 5 years time frame, and I think we are in a great spot in terms of how we see our business unfolding in next 1 year and 2 years and so on.
All right. Okay, Abhishek, we'll leave it at that. Thanks a lot for joining in and giving us an update on the business and the way forward. Let's slip into a quick break on that note. On the other side of the break, lots more coming up on the markets. And of course, we have TCS earnings later today. More